What's going on, everyone, and welcome back. So in today's video, we are going to talk about the importance of the short ratio, the short percent of float, and we're also going to talk about the importance of the short percent of shares outstanding. I want to kind of just do a discussion video where I briefly touch on the importance of all three of these in relationship to buying stocks in the stock market. Now, if this is your first time tuning in, go ahead and hit that subscribe button and make sure to ring the bell, guys. We do a lot of stock analysis. We do constant updates to all the stocks we cover and also our live chats, okay? We are committed to subscriber satisfaction, so make sure you come check out some of our live chats. So as many of you know, just about every stock analysis video that I do, towards the end of the video when I'm or just whenever that I'm looking through stock fundamentals, one of the biggest fundamentals I like to look at is the short percent of float and the short percent of shares outstanding, okay? Now, this isn't the one I'll tell-all sign if you should or should not buy a stock, but it should always be considered, okay? So the first and most important thing to think about is you have to think just exactly what is a short sale, okay? So typically when you buy a stock, you own it, okay? You go out, you purchase shares, and now you own those small shares of ownership in the company, and then you sell them once they appreciate in price, okay? Now a short sale is actually the opposite of that. And what you're doing when you short a company is you're borrowing shares from your broker on a marginal basis, okay? So you don't own these shares. You're borrowing them from a broker on a marginal basis. And then collectively what you want to happen is the price to depreciate, and then you pay for them at a cheaper price, okay? That's why short ratio, short percent of float, and short percent of shares outstanding are very important metrics before you buy a stock. Right over here, guys, where it says short ratio, okay? So the short ratio is calculated by dividing the number of shares sold short by the average daily trading volume, okay? So the higher your short ratio becomes, in my opinion, the more downward natural pressure a stock can face, okay? It's very important to consider that. Now, there is quite a few cases where a stock has a really high short ratio, really high short percent of float, and the stock takes off and runs really high. You know, that's usually due to a really bullish scenario or some news coming in, or a lot of times what it does is it creates what they call a short squeeze, okay? So that's the combination. A short squeeze is when you have a lot of incoming buyers and also a lot of people covering out of their short positions. That's what makes the stock run up really, really high. A good example I can give you of that right now on the market is AMD, Advanced Micro Devices. So AMD used to have a really, really high short percent of float and high short percent of shares outstanding. But ever since that Wall Street has gotten ridiculously bullish on AMD, all those shorts are getting burnt, and all those buyers are taking big gains, 7% gains in days. I've seen AMD take 12, 13, 14, 15% gains in one day. Because like I said, it's a lot of institutional buy-in, and it's a lot of shorts having to cover out of their position to reduce losing any more money. Okay, so this next one, short percent of float. Let's talk about that a little bit. So the float is the actual amount of shares for available trading. Okay, so there's going to be certain amounts of shares, whether it's, like I said, ownership or buybacks and things like that, that takes so many shares completely off of the market. Okay, the float is only the amount of shares that are available for trading, so it creates your daily volume. So it's a pretty simple concept. It's the percentage of shares that are short compared with the, compared to the float, the amount of shares available for trading. Okay. So this next one, short percent of shares outstanding. This number is always going to be a little lower than the short percent of float, because the shares outstanding, like I said, there's usually a lot of ownership buy-ins and company stock programs and things like that, where those shares are already pretty much locked in. and especially with company buybacks. So they buy back so many shares, those aren't available to the trading public. Okay, so your short percent of shares outstanding is going to be a little bit lower of a number. So what does all of this mean? Why is it important to look at the short ratios and the percent of float and shares outstanding before you buy a stock? Okay, the reason this is so important, guys, is because this is a signal directly from Wall Street. This is a signal directly from other traders. If 1 out of every 5 people considers a stock to the price to be going down and they're willing to put money on it, that's usually a very bearish sentiment, okay? It's usually a very negative thing for a stock to be highly shorted. I can think of a lot of cases like GoPro is one. I remember when GoPro was up around $80 and $90 a share a few years ago, shortly after it IPO'd. I remember their short interest getting up to like 70 and 80%, okay? Now GoPro is trading around $6. So you see, that's why it's a negative thing. It doesn't always mean that the stock price is going to go down, though. You know, like I said just a minute ago, one recent example I can think of a stock that had a lot of shorts in it was Advanced Micro Devices, AMD. AMD used to have about a 20% short percent of float and around an 18% short percent of shares outstanding, and it has run from 16, 17, it's probably ran 100% in just a matter of a few weeks, maybe a couple months, maybe 2 or 3 months. But things got really bullish for AMD. Okay, so the stock price is running again on 2 catalysts: is the bullish direction the stock is moving, the bullish direction the company is moving, and also all those short sellers having to cover out of their position and get out. It's called a short squeeze. Okay. All right, so just do I use these metrics directly to completely make my decision before I buy a stock? No, I do not. I just picked up shares of Advanced Micro Devices the other day at $25. But some of my biggest positions, I'm going to show the short ratios, short percent of float, short percent of shares outstanding, just to kind of illustrate exactly what my take is on and why I think this is so important. So right here, guys, this metric right here is from Google, ticker symbol GOOGL. Okay, Google is one of my favorite tech stocks, if not my favorite tech stock, and as you can see, has a very low short ratio, short percent of float, and short percent of shares outstanding. As a matter of fact, it's less than 1%. All right, now here is Apple, ticker symbol AAPL. And so right here, guys, again, just another good example of like less than 1%. I've been holding Apple for about 5.5 years now, and this is one of the big reasons why. Now, last but not least, guys, is Microsoft, ticker symbol MSFT. And this might be the lowest percentages I actually have in my portfolio. So the short percent of float is 0.59% and the short percent of shares outstanding is 0.58%. I just love me some Microsoft. Alright guys, thanks for watching the video. I hope you found it useful. I hope this has helped you learn a little bit more about why short ratios and short percents are important, okay? Make sure to hit that like button. Make sure to subscribe if you haven't done so already. Leave me a comment if you have any other further questions. And like I said, always and every time, have a great day and happy investing.